our delivery methodology is actually geared up for this very scenario because of the fact that we're overlaying the planning phase with the pre-construction and the planning of the construction phase.
Hello, ladies and gentlemen. Welcome to Commercial Real Estate Secrets. I'm your host, Austin Hare, and our guest is Bruce Johnstone. Bruce Johnstone is Director of Client Services at Apex Design Build. This is a family-owned company, which is a fully integrated design and construction firm that's working in the healthcare market. They've been in business for 4 generations, and Bruce has 11 years of experience under his belt. So, Bruce, thanks for coming on the show today.
Hey, Austin, thanks for having me on. Happy to be here.
Yeah. All right. So let's start with you. We always like to get to know our guests on the show, their personal journey, and how they got to where they are. So I know in your case it's a family-owned business. So it seems like this is something that was set out for you from a young age. But I mean, did you always know that you wanted to be in this? I mean, what was childhood like growing up for you?
Sure. Yeah, it wasn't necessarily an obvious thing growing up, but as sort of approached the time of exiting school and making that decision, it did make sense. There was a ton of opportunity for our company to continue to grow in the healthcare space. So it was a welcomed opportunity for myself, and I've got 2 brothers in it as well. So yeah, certainly growing up in a family business, typical of that type of journey. You hear a lot about business as you're growing up around the house. So that was the case for my brothers and I, for sure.
Yeah, I always say the best thing my dad ever gave me was mindset, developing a growth mindset. So I remember he introduced me like a self-development book. It was like The Psychology of Winning by Dennis Wheatley. And then that turned me on to Rich Dad Poor Dad and all these types of things. But, I mean, I can't even imagine what it's like for a lot of people who don't have, like they're a first generation entrepreneur. I mean, it's just a totally different way of thinking. And
it is, yeah.
Sounds like you had a very similar situation too. What is it like? So, I mean, you're, like you said, 4th generation family-owned business. Did you want to go specifically? Like, how old were you when you knew you wanted to work at Apex Design versus like, did you think you wanted to start your own thing? I mean, what was that like?
Yeah, I mean, for me, it was certainly, early high school that it seemed to, make sense. It started to resonate. Just, you start to get, like you say, a mindset where you're become interested. And for me, it was around that age, 16, 17, where you're really trying to, funny as it seems, as it is, you're still quite young, but you're starting to try to figure out, what does my future look like? Where am I going? And for me at that point, there was a lot of just possibility with where the family business could go. And I suppose it was more of a short-term and less of a long-term mindset at that point, where I didn't think about the possibility of, hey, maybe this won't be forever, but certainly thought that, hey, I can see that the healthcare space is generally stable, and I can see that what we're providing to the healthcare space could be continued to improve upon it, evolve as the company grows and evolves, and that was attractive. It's there was a challenge there that was obvious to be a fun journey. So that was really
that's cool. So like around 16 or 17, you kind of knew the direction you wanted your life to be on.
Yeah, and like I say, at least for the short term, because it's hard to at that age look out even 10 years, let alone look out 10 years in today's climate, and so at that age, it seemed very much like a natural sort of progression and just kind of moving into the family business and getting started, asking a lot of questions, learning as much as you can about business, and exposure to it is like you say, it's certainly an advantage. But no, I really never had the thought of starting my own thing or being a first generation entrepreneur in that sense. Because it was just business is there and the opportunity was offered, and so why not? Let's go.
Yeah. All right. And so we were talking off camera a little bit about you and your brothers have kind of helped to take a different direction. What did you guys focus on, and how did you change that?
Sure. So really, the history of the company for us, starting in architecture, the first 2 generations being architects, and there was a healthcare focus, working mostly in larger health systems. And then as the third generation came into the business, my dad and his brothers, they introduced construction to the architecture firm. And then as sort of they took over the company, it really became solely a construction company, still working in the healthcare space. And that was the case all the way up until the GFC, that sort of 2008, 2009. And a lot changed then. Healthcare providers, professionals are looking for more value. Everyone's looking for more value. And that was the era when my brothers and I came into the business. So between 2008 and 2010, the three of us joined the company, and really just listening to our clients and them wanting someone to take the whole project, bring more accountability to the design and construction process is what motivated us to bring design and architecture back in-house rather than having it, separated in the traditional model where an architect was retained and then our company was introduced or brought in as the contractor of choice. So that was what, sort of the change that we as the fourth generation started working towards bringing to our company and bringing that to the industry. Because we had so much focused expertise over the course of generations, you sort of accrue that just knowledge base of how to plan and build healthcare facilities. But more our mentality was like, well, how can we make the process better? How can we make the delivery methodology improved? And that was what we set out to do. And we're thankful to have some great folks join us early on in that process and that journey, because that's really what it takes is a good team, good people. So
yeah. All right. So I think a lot of people think that you got to go essentially hire your architects and then get them to create the design and then hire the contractors in order they can save money, especially when you're working nationwide. So, but I know
Sure.
that's not always the case. So how would you approach that?
So of course I'm biased, but yeah, traditionally what happens, what's commonplace is, like you say, architect is retained, a set of drawings is complete enough such that those drawings can go out to bid to general contractors. And it's just known, thought to be, I should say, the most cost-effective way, because you're getting multiple bids, you're getting, some level of transparency on what is being bid on. They're all working off the same set of drawings. And so the thought is that that's really the way to get the most cost-effective project and partner with the right folks. When in reality, we find that process is broken, because what happens is that inevitably that set of drawings is either misinterpreted or bidders are not necessarily providing the exact same bid, and so the decision that's made on whom we're going to work with from a construction standpoint might be based or heavily focused on the price. And what that's creating is the possibilities for change order later on once the construction phase is underway. And so that's where then that cost effectiveness is really lost. And so what we like to consider more is cost control and accountability, rather than looking at what's the cheapest or most inexpensive contractor to hire. Let's switch around that mentality and more think about what's the best way to create a plan for a project and attach a scope of work and a budget to that project and control that environment, that whole working of developing the plans and the budget, control that process to maintain cost efficiencies, cost control, accountability. It's trying to mitigate the risk of later incurring costs once we're under construction. So that's what we're working to do.
Yeah. Well, because change orders is what drive up the cost the most, right?
Exactly, and that's always kind of when the decision has already been made. This is the contractor of choice. They've been engaged. Typically, they're underway with the project before those change orders are introduced. So you're at a point of no return. That ship has sailed. This is my contractor, and I've just been presented with 80,000 hours of change orders, and that's just the first one or whatever. So that is typically just kind of how the traditional model works. Of course, there's exceptions to every rule, but that was the commonplace challenge or problem that we set out to address and fix with our methodology.
So would it be accurate to say that your initial quote might look higher by having them together, but there will be way less, if any, change orders, and so when you're all said and done, it's going to be less expensive, you think?
That's right, precisely. So a lot of times we, so the hesitancy of clients engaging Apex or engaging in the design and build process is twofold. Firstly is that, initially we look more expensive. And the reason to that is that our team is bringing those, what would be change orders, to the attention of the client from day one. So we're trying to inform a lot more than what the traditional process does, because we're looking at the project holistically. We're taking into consideration the design intent, the architectural engineering of the project, what's the building type, and so on, and then what is the scope of work truly that's going to attach to that project, and it's looking at it holistically, like I say. So that's the first part. The second part is that, a lot of times the whole plan for the project is not thoroughly complete before it's sent out to bid in a traditional model, and so to that end, that's what creates the ambiguity and the change orders later on in the process.
Right. Yeah, it totally makes sense. I mean, I'm sure most people have remodeled a home or something along those lines, and it's like you get a quote and you get a price, but there's just always changes that come up because you change your mind or you don't have the foresight to think about what it's going to be like, when certain things are fixed. And I can 100% resonate with that. And it's like the same type of concept. It's like you're just thinking through all the scenarios with hundreds of transactions, hundreds of projects of experience under your belt to be able to foresee, okay, like, well, usually this happens and usually people want this and that sort of thing. And so essentially it's a, what you're delivering is a full scope, like top to bottom build out. So from like, how does it work? I guess there's two scenarios. You guys don't ever invest in the real estate yourselves, right? But there could be somebody who either a group buys the real estate and then you could start from the ground up with construction. So essentially they're just purchasing the pad. Or you also work when they are leasing an existing space, right? Or maybe they buy an existing space. It's got an existing building, right?
That's
You're getting it ready all the way to where all they have to, like, essentially they, turnkey, open the door, ready to go, water working, lights working, fixtures working. All they got to do is set up their computer equipment, right?
Exactly, yeah. So those kind of two different project types, one being like a ground up development where either the client or real estate investment group or fund or whatever is purchasing the land and funding the project. But our team in that scenario is taking it from very beginning to end. So the initial planning and due diligence work on that site before it's purchased or acquired to prove out that what we want to build is going to work and going to fulfill sort of the intentions of the user. But we take that then all the way through that early due diligence phase into design development, architectural, drawings, construction documents, construction, the construction phase. So really, like you say, from beginning to end. And that's the ground up sort of scenario. The other being either a leasehold or a real estate purchase, but some sort of existing real estate that's going to be converted or upgraded for the use for healthcare, whatever type of specialty it is. And in that scenario, same thing. We want to be supporting that process during real estate acquisition because there's a lot of unknowns typically. Let's say let's just use an example where we're going to buy a bank building and convert it to some sort of medical healthcare facility. Well, how well is that building going to be converted, and what are we going to run into from a base building upgrade standpoint, and then the interior build out itself? So our team wants to get involved during that real estate acquisition process to provide all that insight, supporting the due diligence before the purchases or lease is made. And then, assuming it all makes sense, we carry right on through the design, the planning, the architecture, the construction, and deliver it turnkey. So that's our involvement in kind of either scenario. You mentioned real estate development or like investment. That's something that our firm certainly collaborates with other folks on, to bring that solution, because sometimes healthcare providers don't want to have to either tie up the capital or take on the debt, or be part of that that part of the equation. So we can bring those types of solutions to help offset that that exposure.
Okay, so when you say that, you're talking about help with the finance or what?
Sure. So if a let's say it's a real estate purchase and redevelopment, some clients want to own that real estate, or want to kind of be the real estate investor, so to speak, for their own practice, their own facilities, whether it's a standalone or a multi-site group, and they'll take on the debt, or they've got an investment team behind them. Other times they don't. Other times they're simply wanting to focus on their own operations and running their own practice, and they're looking for a partner that's going to bring funding, bring capital, rather than going through the traditional lending process. And that's where we can offer that through partners that we have to
what
introduce.
Can you speak vaguely about the terms? Like, are you actually acting as the bank, or you just have a bank that you work with to provide them the capital?
We're not acting as the bank. Instead, we're really bringing in someone who, real estate investors, someone who wants to own the property and have that user as a tenant. That's what we're doing, because we don't want to, we don't want conflict of interest, or being the design builder and the developer and the investment group. Instead, we want there to be sort of an unbiased third party, but just taking away the traditional lending, if that's the better way to do it, and introducing a real estate investment group or team, or maybe it's just an individual who's bringing the capital to fund the project.
So I always love talking about real life stories and things that happen, both success and failures. Like, do you have any clients that you can think of off the top of your head, obviously without naming their names, that were just like they did everything wrong and they invited you guys in and you had to come fix it?
Sure, we could think about a couple of different scenarios. I suppose one is starting in a direction with planning a project, and having to face reality that this isn't working. A lot of times, again, I'm going to sound biased, but a lot of times, doctors or groups will set out planning something and not having enough insight into the cost of the investment or what they're getting into. So a real example of that was had a group that retained an architect, went through plans for a new building. It was a ground up, and the plans were complete. They had spent six figures on plans, engineering, all the civil work was done. It was ready, and then they discovered that they were $800,000 over what they were anticipating for the project total, and what they had already been pre-approved from a bank to fund the project. They were $800,000 over budget. Now, 800 grand is a fairly large gap to overcome between what you've been approved to fund and then what the real sort of project is. The dilemma being that the client has already outlaid six figures into the plans, and so it's hard to pay that again to recreate the plans and try to realign with.
It's a sunk cost, but it's hard to let go of that.
It is exactly right. Yep. It's you've made that investment, that cash is gone, and you've got a set of plans that realistically isn't going to work. So we came into that scenario, and of course, it's one of those things where it's a bit too late to correct it easily. You kind of have to start over. The client had to sort of take a break from the project for about 12 months, and then we restarted and kind of went at it more from a design and budgeting exercise concurrently, and we were able to get the project done in a fashion that was affordable and delivered the project. But that was a lot of the unfortunate thing is a lot of wasted time.
How much money did they waste, and how could they have avoided it?
Well, hard costs or expense that they outlaid would have been the cost of those drawings, the first set of plans. It was just a bit over $100,000. But really, where the true waste is in time that's lost,
Yeah.
because they had that 18 months, 12 months that was just paused, waiting to kind of recalibrate, and then we had to restart the project and go through all the planning exercise again before we could break ground and start. So it's 18 months lost. Where if you look at that more in the lens of missed revenue of being in the new facility, that's where it hurts the most. And I wouldn't be able to put a figure on that specifically, but that's really where the loss comes in that type of scenario.
Yeah, yeah. Okay, now let's talk success stories. Like, like, can you think of an example of a client that did like everything right, and you guys, they say they didn't end up spending extra money, everything was on time. Like, what things did they do that contributed to the success?
Sure. Um, the thing I feel like is the most successful, I'll give a real example for this one, is getting the right folks on the team from day one, obviously. But a success story there was we had a client come to us, had found us very early in the process before they had even located a site to build on, and we were able to bring someone who understood the real estate, healthcare specific, understood what to look for, how to run the studies and the reports needed to really identify the right location for them, and secure that property. Then how to fund it. This one was a bit unique, but we actually did a sort of a short-term land purchase and then sold the land back to them once their loan was open. But really what that did was allowed them the time to get the right source of funding in place and mobilized, and combine that with the funding for the project itself. And again, that one was a bit unique because we had to move fast on the land to actually secure it. But the good thing there was that, we had a team that knew how to maneuver in a unique situation to secure the land, do the due diligence first, but then secure the land quickly using a sort of a tailored funding mechanism to fund the land, first as an initial package, and then turn around and sell it to the client again once they had their loan open to fund land and building costs.
I like that strategy. It's I think it's hard to grasp, in your head, but like, can you actually put some numbers to that strategy? Obviously don't talk about the client name or whatever, but I think saying how the numbers actually broke out might be helpful for the audience to get an understanding of it.
Sure. So the scenario is doctor knows that they want to build. Let's just start from the beginning and build this kind of from where it initiated. So they know that they want to build and they want to be within a region nearby where they're currently practicing. That's where their patient base is. It's a specialty clinic, and they know that this is the right demographic. They want to stay there. They're experiencing growth, and so that's what's motivating this transition. Because of that, land and finding a site, the inventory is not unlimited. So you really have to identify what works, identify a good location, and be sure that you can secure it, of course, without compromising sort of the financial outlay to the best you can. So as we went into that process with the support of real estate broker, identified the land, and there was really only 2 sites, with one of them being a clear winner. That clear winner, we were in this scenario competing with another buyer, and the way that we were going to compete was by having a short, close time, a short due diligence and close time. We knew that we could do the due diligence on the site to prove that we could build on it and achieve what was needed for this practice, but the client was going to have a hard time securing their funding and getting that open before, in time to close. We were trying to do a 30-day closing, I think it was a 30-day closing on the property. And so to overcome that obstacle and make sure that we could secure the property, knowing that our due diligence was done, we had done the necessary studies on the property and conceptual plans, we said, look, let us take away that hurdle so that we can, in fact, secure this property and be sure that we have the right location for the practice. So in that instance, the land was $450,000. We were able to mobilize outside funds, outside a traditional lender, for just a short-term, like bridge loan, essentially. And of course, there was interest on that, but exactly. And it really only needed to be a couple of months. I think
Yeah.
it was
It's higher
a three
interest.
month
What was
deal.
it, like 10,
Higher
12%?
interest. It was 10. Yep, it
Yeah.
was 10. So 10% interest
But
and
over a few months, I mean,
3 months. Three
yeah,
months.
it's
And that was enough. Yep, that 3 months was enough to get the plans done to the degree that the client could go to a traditional lender with the plans, with the final number, and bundle that land for 450 grand in with the building, development cost and package it together. Um, so, I mean, that's a success story in the sense that without the right people behind the client, uh, very likely would have missed out on that site, which we approved
yeah,
was the
and I
best
want to talk
site.
about that because a lot of people really stray away. They'll lose deals over interest rates, and it's like oh well,
Hmm. Hmm.
12%, 10%, that's triple the the normal rate above LIBOR or whatever like that I could pay.
Yeah,
But you got to remember, is it worth losing the deal over? And so at the end of the day, interest rate, like how much is it really actually going to cost you, especially when you're talking about the amount of money that's not for the full project and a length of time that's not very long. So in this case, like yeah, a lot of times, and we look at that, we experience these a lot. Like we look at these types of deals a lot where we have bridge
hmm
loans, mezzanine debt, hard money, whatever you want to call it. So
hmm
they're designed to be for smaller amount of the project and a shorter period of time most of the time. But like that, yeah, sure, you're overpaying the interest, but that allows you to get the deal done. And if it's like, is the
exactly.
opportunity cost worth foregoing a
What
few
is that
extra
worth
months?
to the practice?
Yeah.
Exactly.
So a lot of times these are great solutions if your capital is tied up somewhere.
Exactly. And that's what, I mean, it's hard to say, put a number on it. What is it worth to secure the site? But if you can look at it more as what's the cost of missing out on this opportunity, suddenly you can see, tons of value in that short-term, high-interest solution. In other words, if we took the alternative site, it was another 3 miles the opposite direction, and the accessibility was not even close to as good as the preferred site. That means a lot to a practice when your patient base is elderly. You're relying on a lot of visibility because they're not perhaps online as much. You're relying on word of mouth, and you want your practice to be super accessible, easy to find, and that's worth tens of thousands of dollars, hundreds of thousands of dollars, whatever it might be, over the term of your occupancy in that site versus the other one. So it's you really got to look at
Yeah,
it
I'm
in the
sorry, I
macro
kind
instead
of
of
I
the micro.
interrupted your story, so continue with the.
No, no, that was really just the
Okay.
as far as success. That was just the early part of
Yeah.
that project. I guess is what it's pointing out is just the successful way of getting the project started and off the ground versus kind of not getting off the ground for 18 months and losing out like in that other
Right,
scenario.
right. Exactly. So, all right, I want to talk a little bit about costs. And, obviously, we're in an inflationary environment. CPI came back at 7%, which truthfully, I bet is an underestimation of how much it actually is. You've got supply chain
Hmm.
shortages. We could argue about whether or not it's transitory. At the end of the day, I mean, I don't think prices are going down. I think we can agree on that. So, what are you guys seeing? Like, how are you combating this? How are you preparing for that? And then, it varies, of course, like costs vary widely from state to
Yeah,
state, because you go across the nation.
yeah. So I guess to start with how we're combating it, there's not really just the one magic solution, unfortunately, in situations like this. It's fairly complex because it's both materials and it's labor, and when both are in short supply, it creates it just creates a lot of challenges to get a project done on time and on budget and so on. Um, but I guess what I'd say is for us, our delivery methodology is actually kind of geared up for this very scenario because of the fact that we're overlaying the planning phase with the pre-construction and the planning of the construction phase. And so when you're dealing with long lead times or expensive, or increased in cost on supply and labor, you want to know about those things as early in the process as you can so that you can simply use time to combat them. And so, for example, let's just talk about roof system. Let's talk about the shortage of supply of steel causing delay in getting our roof systems installed on a new building. Well, if that lead time is 6 months, in the traditional model, a general contractor would bid a set of plans when those plans are perhaps only a few weeks from going in for permit, which means that once permit is in hand, let's say it's even 8 weeks, that contractor that bid that project is likely expected to, mobilize pretty soon thereafter. Let's give ourselves a little extra time and say it's 8 to 12 weeks from the point of, being the bidder of choice and securing that project, and then theoretically you should be mobilizing on that project, 8 to 12 weeks later, 2 to 3 months. Well, that doesn't give a lot of time to combat the supply of materials and the labor shortages and that sort of thing, which then puts a ton of pressure on the GC, the contractor, to deliver the project in a timely fashion and control costs, because now they're forced to rush materials and pay more to get it faster, and they're forced to pay labor, pay their trades more to get them on site, and so that's where, again, time is not in their favor in that model. Whereas for the design and build model, a pre-construction team is working concurrently with the design and architecture team that's planning the project, and so we're taking it all the way through construction phase. It gives us an extra 6 or 8 months to mobilize and get materials in place, get the labor, the sub trades in place, and so that really, again, it's just naturally our process, our methodology, sort of works against or helps to combat that. It's not foolproof. Obviously, we're still battling the same challenges day in and day out as everyone else is in the industry, but it certainly helps. So that's really, I guess, the point is we use time. It's our biggest tool to work against it and to kind of offset the challenges that we're seeing right now with supply and demand. I think your second point there was cost, and mitigating cost, obviously it's very closely aligned. As I mentioned, if you're not rushing materials and instead you're putting it on the books, in the time that is being requested, it helps control cost. But costs are continuing to rise, and like you say, we don't see them coming down anytime soon. And so, the thing is let's just plan it. Let's just plan accordingly. It's better to be well aware of that when you're planning the project than not being aware and expecting something different until much later in the game. And so, being aware helps mitigate it, helps control it, and that's the best we can do at sort of in these types of scenarios. The question often comes up: does it really make sense for us to build this practice today with the way costs are? Let's say it's a 20% increase right now over what we were seeing 24 months ago. We get the question often, does it really make sense for us to build in today's climate? And it's a deal-by-deal calculation that has to be made. And it comes back to the cost of, what is the cost of not doing the project today? So if we don't build today, is the practice going to suffer financially? What you're going to be able to produce, is it going to reduce the financial performance of the practice so much so that it's offsetting and you're worse off than incurring the 20% increase in today's construction costs? And that's about the most practical way to look at it, because otherwise you could be stuck. And sometimes it actually doesn't make sense. If your practice is only going to see a 10% growth or 5% growth, and you're going to incur a lot of costs right now that's going to put extra burden and strain on the performance of the practice, let's say, then yeah, I would certainly caution taking on the project in this environment. On the flip side, if you're going to see a much higher rate of growth, then the return on that investment likely makes sense.
Yeah. So what should people expect to budget? I know costs vary widely, but how can you start to get a framework for pricing? between what and what, depending on, what part of the country you're on.
Sure. Yeah, your point there about what part of the country is a significant factor here. But let's just talk in averages. And also when we talk about costs, bearing in mind we're considering the cost of design, the cost of architecture, the cost of construction, all kind of bundled together. So the total cost of design and build. And maybe we could break it down into two scenarios, one being an interior build out with limited amounts of, base building upgrades, and then the other being a full project, developing out of the ground, site work, exterior construction, interior build out. So firstly, on the interior build, the thing that's commonly, sort of discussed in the industry is what is the cost per square foot. I'm going to use that framework for the sake of this conversation, even though the per square foot is part of that calculation. And so if it's 2,000 square feet versus 20,000 square feet, obviously a big difference in the economies of scale there. So again, we're going to operate on averages. So interior build out in today's climate should certainly expect at least $150 to $200 a square foot for all the planning and construction of a project like that. A lot of factors that are going to influence that, and the biggest would be what is the existing condition of the building, whether it's leasehold or purchase, that we're building out, that we're putting that interior build out into. Like if we have to upgrade all the mechanical systems, if we need to bring in more water, more power to support all the needs, the infrastructure of the practice, that's what I'm referring to. That's what's going to increase those costs. The second part of it is, is this a Medicaid practice or is this a high-end fee-for-service practice? Level of design and finishes is going to influence cost. But generally that gives you a framework of what it looks like to do an interior build.
Yeah, and can you talk about frameworks, like what pricing you're looking at right now? Like between what?
Yeah, so $150 to $200 a square foot is what we're seeing for like interior builds for that type of project. Now to jump over to a ground up, same story, right? All the existing conditions are going to impact it. What type of building are we building, so on and so forth. Right now, I would suggest somewhere between $350 and $450 a square foot is the average. You're going to get some parts of the country where it's upper 400s.
So it's like, from ground up all the way to being done. So really you're combining.
That's right.
Because most people will, there's like the cost per square foot to build and deliver a vanilla shell. So I want to parse that out, because when you say cost to build per square foot, that's like industry standard, like, to give it deliverable. But now you as a healthcare operator are also having to, calculate the costs to get it deliverable to the patients, and there's a separation there. So really, I mean, that makes sense. It doesn't even sound outlandish at 350 to 450 when you talk about the fact that you're combining all those things together.
All the site work, the exterior. So to split it between those two things. So we already talked about the interior build. Let's assume that that's averaging between 150 and 200. That's what we're seeing. The site and shell work typically is between 200 and 250. Just to elaborate a little bit more on the site and shell, the things that influence that. Of course, you have the building structure, the building type, construction type. What are we building? But then a lot of it is like what type of site are we working with? Is there a lot of water management expense? Are we bringing in new utilities? Is it currently farmland or forested or whatever else, and you're bringing utilities from a distance away, or is it fully set up, pad ready, as we say, utilities are all on site and it's ready to go? So there's a lot of things that impact the cost, but that's a framework at least to work with.
Yeah. So obviously, cost varies widely from the Midwest to LA, right? To New York.
Yeah, sure.
Super urban metro areas are going to be more. I know we talked off camera, the Southeast is rising. Like, I think when you think of expensive, it's just assumed, huge metros, LA, New York, they're just going to be super expensive, right? The cost of living is a lot. But the fastest increase right now is happening in the low tax areas that people are coming to. It's kind of like, I think they call it like the red wave. Like the Republican states that have lower income taxes are attracting people who can work from home because they don't want to, pay taxes, and driving up, all of the costs for everything, cost of living, cost of real estate. Everything is becoming more expensive as it's become more of a destination. But you still got areas like in the Midwest that are just super like labor cost of living is lower, and that's just going to directly translate to the labor. And so that I think we said 30% is materials, right? Like of your cost. There's nothing you can do about
Yep.
that. I mean, those aren't going to vary. But 70% is labor. So I mean, that's obviously going to make a big
Yeah.
on where you go.
Yeah, so let's talk about that just for a second. So 70% of a project is labor. What you just we're speaking about where markets are growing and there's a lot of development happening and labor is very, very busy. There's already such a demand and such a strain on them. Well, that's of course going to drive costs, and that's on 70% of the overall cost of the development. And so yeah, I mean areas of the Southeast, Florida and Georgia and Tennessee, and we're seeing a lot of states where there's heavy growth. Texas is very busy. We spend a lot of time there. You're seeing these that's where you're seeing the cost being at the top end of the scale and beyond, and it's to a point where doctors or groups that are funding these projects, if it's being funded through traditional lending model, for example, we're having appraisal shortfall, challenges because the cost of development versus what's in the market, comparables just don't align. But yeah, those are certainly the markets though where the costs are at the top end of the scale and beyond. I was talking to a large healthcare lender the other day, and they're seeing projects even in that ground up scenario approaching $500 a square foot in those hot markets, let's call them. Whereas in other areas of the Midwest, you're at the low end of the scale. You're around the 350 a square foot all in for those ground up projects. It's a big difference. As a percentage, you could do the math, but you're 150 to $200 different, for that ground up project. So yeah, I mean, so much of it is labor, and the materials are generally, the material costs are generally kind of universal, I suppose you could say, kind of from one part of the country to the next. Although even that, there's going to be some variable just depending on where is the material being sourced from. But yeah, it's certainly the thing that we focus on is the labor, the cost of labor.
Yeah, that's huge. So where do you see, what are you guys seeing in terms of cost? I mean, there was a huge increase in costs. Like labor, I think is here to stay. The way I look at it is we had a lot of inflation back when there were essentially printing money, for lack of a better term, whatever you want to call it, with the Fed did, increasing liquidity right into the system. So that's obviously going to have an effect on inflation. And so the question is it's going to continue to go up, or do you think that we've seen things plateau? And do you think the rate of change, the rate of inflation is going to be slower moving forward? What are you seeing, and what's your opinion on that?
I suppose it's typical question is what's going to control inflation, and one of the factors is interest rates, as everyone knows. When is that going to go up? Because right now, when rates continue to be quite low, the cost of money being cheap is going to motivate the demand to be there. I mean, really, the question is when is demand gonna let up? And that's when at least that 70% cost of labor is going to start to come down. When we see that really happening, I mean, I don't have the crystal ball, but I guess certainly not in the next 12 months. We wouldn't anticipate any real change.
Yeah. You see it increase
the question
a lot in the last 12 months, or just staying flat?
We haven't seen tons of change over the course of the last 6 to 12 months. For us, at least in our industry, it took a huge leap. The cost of construction went up early on when inflation was kind of perhaps not being discussed as much as it is today. So early on in the the COVID era, we started seeing these, challenges, and it started on the material side. Cost of materials were going up, and that's what everyone was talking about. That was impacting the cost of construction. But then what really worsened things over the course of, starting 12 months ago was when cost of labor also started to increase. And so it's been, the combination of those two things. So, it's hard to say, but I wouldn't expect a continued, dramatic increase, but rather kind of a leveling out, but certainly not going down. Annually there's an increase in the cost of construction anyway, and it's a few percentages. The number I forget, it's like 4 or 5%, I think. The costs go up anyway year over year, and so you might see something to that degree, but I wouldn't expect it to be another 15 or 20% jump in the next 12 months. So to that end, we've seen a sharp increase, and over the course of the next 12 months, we're more expecting it to be, moderate and starting to plateau.
Yeah, that's cool. All right. Well, hey, listen, this has been super insightful. Anything that you'd like to share as we close?
Yeah, I don't know. I don't think so, Austin.
Okay. Just want to make sure we didn't.
It's a I don't think so. It's a complicated time right now, that's for sure. But we like to approach things with creativity, flexibility, find solutions. That's really what continues to make things work. So no, other than that, really don't think so. Anything else to add?
Well, yeah, this is great. It's super important, especially in our industry, figuring out how real estate correlates with design and build. And so being able to combine those costs to create more efficiencies, I think is super important. So if anybody wants to reach out and get in touch, find more about what you guys do, what's a good resource for that?
Yeah, sure. Our website is probably the first place to stop in, apexdesignbuild.net. Easy to get in touch with us through the website. Obviously, you can peruse some of the work and what other groups are doing. And that's probably the best way to reach out. Call us, shoot us a message through the website. That is going to be the fastest. We're always quick to pick up. So,
yeah, fantastic. All right, Bruce, thanks so much. Appreciate it.
Thanks, Austin. See ya.